If you're watching this video, there's a good chance you picked your market the same way most traders do, just going with the one you'd already heard of. But in prop trading, that alone can work against you. Hi, this is Athena with NinjaTrader. Today we're comparing futures, Forex, and CFDs because the market you choose to trade in prop directly affects how you get evaluated and paid. A solid strategy in the wrong market can still leave you fighting hidden costs and inconsistent execution the whole time. So let's get into it. Starting with futures. Futures markets are built to professional standards, centralized, regulated, and they run on exchange-based pricing. No house spread baked into the price, no broker sitting on the other side of your trade with a financial stake in the outcome. The price you see is the market price. Many major contracts offer deep liquidity and efficient execution. Standardized contracts make evaluations cleaner and more consistent across firms, and you can scale your sizing gradually using mini and micro contracts rather than jumping straight into the deep end. Pretty cool. That said, futures aren't perfect. Trading hours are structured and don't run a full 24/5 cycle. Tick-based pricing means precision really matters, and some contracts carry higher margin requirements. For traders who want a transparent, structured environment though, futures can be a strong foundation for prop. All right, Forex. Trillions move through the Forex market every single day, running almost around the clock 5 days a week. So it's kind of a big deal. Liquidity is high in major pairs, spreads can be tight during calmer sessions, and prop evaluations in Forex often come with lower upfront costs and smaller position sizing requirements. If you're outside the standard US trading hours or just want more flexibility, Forex can give you a real option. The catch is that Forex trades over the counter rather than on a centralized exchange, so pricing and execution quality can vary quite a bit depending on your broker. Fill quality, slippage, the specifics on how your broker's model actually works, these carry more weight than most traders expect going in. Some prop firms also use simulated trading environments during evaluations, which may not perfectly mirror live market conditions. And prop rules can vary considerably from firm to firm. The flexibility is real, just go in with your eyes open about how your trades actually get executed. Prop quiz. Do you actually know how your firm handles execution during the evaluation phase? If your answer is, I think so, that's worth researching before your next evaluation. And if you're finding this useful, hit like and subscribe. We make a lot of videos like this and you're not going to want to miss out. Now, CFDs, which stands for Contracts for Difference. The pitch is nice. You can trade crypto, commodities, indices, and more from one account with smaller trade sizes, lower capital requirements, and platforms that tend to be beginner-friendly. Wide access, low barrier. On paper, it sounds great. However, here's where you may want to slow down. Many CFD brokers act as market makers, meaning that they're on the other side of your trade. CFDs are typically traded over the counter with pricing derived from underlying reference markets rather than a centralized exchange. So transparency and oversight vary considerably depending on the provider. And regulation in the CFD space is often light or non-existent. And prop firms running on CFDs can operate with loosely defined rules. Understanding how your broker actually operates before you commit any capital is especially important here. Also worth knowing, CFDs are not available to retail customers in the United States under CFTC regulations, and NinjaTrader doesn't offer them. We're just including them here so you have a complete picture of how broader market ecosystem works. So, where does that leave you? Futures are exchange-traded and standardized, which can give prop traders a real structural edge in terms of transparency and consistency. Forex offers flexibility, but fill quality and broker setup carry more weight than they might look like upfront. And CFDs come with real transparency risk, so do your homework before trading them in a prop environment. The right market isn't just the one you're comfortable with. It needs to support your consistency, your discipline, and your growth over time. If you want to learn more, check out our video going over how prop firms actually work.